Bottom line is, if we want to be able to take advantage of volatility in this current environment, we need to fight fire with fire. We need to have volatility-based tools in order to be able to understand that if after a sell-off, in this case, the sell-off at 10 a.m. with the JOLTS data and the ISM data, right? Where did that land price action? Where did that take the S&P after that data hit, right? So you can see there's your 10 a.m., boom, right down into a green zone of support. That green zone of support isn't just some price-based level. That is a historical volatility-based level that looks back on up to 6 months of historical volatility and says, hey, there are patterns in price movement range, depending on the time of day, even depending upon the day of week. And if we can find those volatility patterns, when volatility hits, we'll be especially equipped to take advantage of it. So here comes the ISM JOLTS data, and price sunk into this range. That is support, and there's a really important decision. Either do nothing or get long. This could be get long the futures. It could be get long the micro futures. It could be get long calls in the SPY. It could be get long calls in the XSP or the SPX. But this is the trigger. And by waiting for the trigger and using a volatility-based trigger when volatility was hitting, we're able to find the zone. So when I start playing this forward, my expectation is that price not only holds in that zone, that it will rally from there. Now, was I expecting this kind of rally? My gosh, I definitely was not expecting this kind of rally. But it all starts with making sure I've defined what could trigger volatility, that's the calendar and the economic events, and what could handle identifying what a volatility-based support level could be. So it's not that different than, a ball player knowing their pitch. And I'm not a major league ball player, but I would guess that when they see their pitch, they know there's a high probability that they will connect with it. So this is our pitch. I know there's a high probability that the support will hold here. And then once I've made contact, I guess that's maybe where the surprise could come in. If I make contact perfectly, right, it's going over the wall. If I make contact pretty good, maybe it's way out there and left field, right? And I can at least round second maybe, right? But I don't know. My job as a trader is to recognize the pitch, and then when it's in the zone that I know is high probability for my swing, that's exactly what I do. And if you're having a hard time identifying zones, say, Rag, I don't know what my pitch is. I'm not sure what it is. That have zones that are automatically being plotted on your chart to help you quickly and without emotion and without bias say, hey, there's an economic event coming out, and if price gets down to that green zone, I've at least got a plan, I've at least got a zone from which I can start to look at taking a swing, quite literally. And this happened in the S&P. Something pretty darn similar happened in the NASDAQ, but this is the anatomy of a day trade. This is how I want to look at my trading every day with automation and a plan and zones that are highlighted for me to take advantage of. What we did in the Sector Secrets Mastery is the setup was to buy SPY. We bought SPY calls. So we go back to that same, just before the hot zone. This is what we saw. And the idea was let the data come out, see what price does, and if it ends up in our zone, right? In this case, we bought the 533 or the 553 or 554 calls, right? That was the plan, and that's just a proxy, an alternative to trading the S&P futures or even the SPX. And it's a really neat way to understand what your choices are at certain times of day by using the automation that, I'm running this on TradingView. I can also run this same thing on Thinkorswim. Find ways to automate processes that you already know work, and then all you've got to do is step back and ask yourself, hey, is it in the range or not, rather than calculating these things manually. Use volatility zones. This is the way that we've been day trading in the mastery, and this just happened to be a great setup where everything came together with an economic event that drove price into a zone and then just spent some time really rocketing higher after that event. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.